Hey everyone, there was an interesting question that came in during Tesla's latest earnings conference call that I thought I'd make a video about. So the question was, has Tesla's order intake trended relatively to production levels in Q2? So in other words, is Tesla's production outpacing demand? So that's what I'll talk about in this video here, and Tesla's response to that question, as well as looking at some of Tesla's production and delivery numbers to kind of take a look at the answer ourselves. So let's get right into it. So CEO Elon Musk jumps in to answer this question, saying demand has roughly tracked production, meaning it's relatively at equilibrium right now. We have demand going at the same rate as production, which is right around the place you want to be as a manufacturer. And Elon Musk goes to length here to highlight that no other car maker has is that we have real-time demand and real-time production. What he means is because they don't have the dealership model where cars first go to the dealership and then they go to customers, Tesla gets the orders and sends them directly to customers. And that way, Tesla gets real-time data on what customer orders are like day in and day out, instead of having to check in with dealers and wait for dealers to reorder inventory, and then they get to find out, hey, customer demand has fallen and we need to decrease production after the dealers inform them that sales are sluggish or we need more time before we need a new shipment. And so it is interesting in that nature, in that it gets that data directly from the customer, and it gets that data faster than maybe other car companies that have the dealership model would. So in this case, I think it helps Tesla because it informs them if they need to increase production, decrease production, or if they need to offer incentives, offer discounts in order to increase sales. And that seems to be the track that Tesla is taking. Rather than decrease production, when customer demand decreases, they seem to have taken to offering discounts and promotions to make sales. Instead of saying, oh, customer demand is lower, so let's lower production, they say they made the choice, customer demand is decreasing, let's lower prices so that customer demand can go up. And one of the reasons why customer demand has gone down recently is because of the rapidly increasing interest rates. Many folks, when they buy a car, they finance it, and when interest rates are higher, their monthly payments are going to be higher, which makes them less excited about buying a car. So when interest rates increased, Tesla said, we need to offset that and we need to offer lower prices in order to mitigate the rising impact of interest rates. However, if you look at Tesla's production and delivery numbers so far in 2023, they're for their total production, they've produced over 900, I would say around 900,000 vehicles for the year, and they've delivered about 889,000 vehicles. So they've got about 920 in production and about 890 in delivery. So production is not outpacing demand to any alarming degree. Now, you might look at the global vehicle inventory, days of supply, and say, well, in the second quarter of 2023, they had 16 days of supply compared to the same quarter last year when they had only 4 days of supply. And I would say that this is a more normalized environment. Having only 4 days of supply is abnormally low, and 16 days is more, you know, realistic. And then also you can look at the last 3 quarters, and it's not gone up all that much, right? 13 days of supply to 15 days of supply to 16 days of supply. And at the same time, you've ramped up production from 439,000 to 479,000. So you've been able to really ramp up production and not experience a significant increase in inventory, which is really good news if you're a company like Tesla. If you're any car company, really, it's good news because the less inventory you have to keep, the more money that flows into the system and the more money you can invest in ramping up technology, investing in research and development, creating new models. And so you don't want to have your capital tied up in inventory. So to answer the question posed in the headline, No, it does not look like Tesla's production is outpacing demand, with the caveat that not outpacing demand to an alarming degree. It is, if you look at the actual number, yes, there is more production than demand. But if you answer that question in terms of is it a concern or is it a risk for investors, I would say no, not yet. It's normal when you're ramping up production and they're trying to get to 1.8 million units for 2023, which would be a big increase from 2022. To have a slight increase in inventory is not a risk here. So there you have it. That's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.